Very good morning to our distinguished guests and welcome to the launch of BPAM's Malaysian Bond and Sukuk Almanac 2021. Please allow me to introduce myself. My name is Al-Bakri from the Partnerships, Retail Products and Media Department, and I will be your MC for today. First and foremost, we would like to express our appreciation to all present today for the time taken to join us for the event. Before we start, I would like to inform everyone that this session is recorded for our reference. Let's have a look at today's agenda. At 10 a.m., we'll have the welcome speech by Mr. Meor Amri Meor Ayob, followed by a presentation by Ms. Audrey Chai. Our second speaker for today will be Mr. Kevin Tay at 10:15, after which we will have our Q&A session and the event will end after that. The Q&A function is enabled from the start of the event. You may send in your questions at any time. The Q&A button can be found at the top right of your screen. If your questions is intended for a specific speaker, do state the speaker's name as well. Given the limited time for Q&A, we will reply to the published questions live during the event. As for the other queries, we will reply to you via the message function or through email. Before we begin, let me share a short introduction of our speakers today. Our first speaker is none other than Mr. Meor Amri Meor Ayob, the CEO and Executive Director of BPAM, delivering his welcoming speech, followed by Ms. Audrey Chai, Senior Manager from BPAM's Partnerships, Retail Products and Media Department. Our third and last speaker today is Mr. Kevin Tay, BPAM's Market and Economics Expert, who is responsible for the valuations of a portfolio of Malaysia's bond and sukuk and macroeconomic research. Without further ado, let's begin this morning's program with Mr. Meor Amri Meor Ayob to deliver his welcome speech. Mr. Meor, the floor is yours.
Thank you so much, Bakri. Assalamualaikum and welcome to the launch of the 9th edition of the Malaysian Bond and Sukuk Almanac 2021. I'm actually grateful that all of you could actually spend some time to attend this event wherever you may be. Now, Bond Pricing Agency Malaysia has been producing this annual almanac on the Malaysian bond sukuk market for the last 9 years. We are proud to be able to produce this publication and make it freely available to the general public. When we came up with the idea, the product brief was actually very simple. First, design a standalone report that effectively takes the snapshot of the Malaysian fixed income market. Second, it should be useful to all stakeholders as an historical reference. And third, for good measure, it should not have any cost attached to it. As a reference document, there are a multitude of facts and figures highlighted within this particular publication. The main takeaway is that the Malaysian bond and sukuk market has depth and breadth. In terms of principle, you have a choice of conventional bonds or Islamic sukuk. In terms of maturity, you have a choice from short-term as well as extremely long tenure bonds. In terms of size, there are small to mega issuances. Simple structures to complicated structures to cater to the cash flow requirements of the issuers as well as investors have all been done. In a nutshell, the market has shown that it has the liquidity as well as appetite to take on projects with long gestation period and size. Ladies and gentlemen, all this and more can be found in this standalone package which the team in BPAM have compiled. I would like to take this opportunity to congratulate them on a successful launch of the latest edition of the Almanac. Lastly, I would also like to seek your help in highlighting to people that are not here today that you may know could benefit from having such information. As you know, there is a direct relationship between information and market development. The Almanac is BPAM's contribution to push this agenda along. Once again, thank you so much, ladies and gentlemen. Now I shall pass back the floor to the MC.
Thank you, Mr. Meor, for your welcome speech. It is now my pleasure to invite Ms. Audrey Chai to present her presentation titled Almanac Introduction and BPAM Activities 2021, where she will be introducing all of us to the Malaysian Bond and Sukuk Almanac throughout the years and BPAM activities and developments in 2021. Please, Ms. Audrey.
Okay, good morning, everyone. Good morning, ladies and gentlemen, clients and partners in attendance. I would like to welcome everyone to BPAM's Almanac 2021 launch event this morning. Thank you for taking the time in your busy schedule to join us today. Hope everyone is keeping safe and doing well this morning. Just to introduce myself, I'm Audrey from the Partnerships, Retail Products and Media Department of BPAM. For my presentation today, I will be walking you through on the initial conceptualization of the publication, historical look back of past almanacs, and then introduce you to the latest version, which is the Malaysian Bond and Sukuk Almanac 2021. Following that, I will also update you on some of BPAM's key activities and developments for 2021. So without further ado, let us look at how the idea of publishing the annual BPAM Almanac was conceived and the whys. As you are aware, BPAM collects huge amount of data every day as input for our services. This includes facility and stock information, trades data, company annual reports, and principal terms and conditions, to name a few. So normally for any person to try to extract those data, they will need to go to different websites and platforms to get them. So based on feedbacks from our clients and partners and through our own market study, there is a need for information on the Malaysian bond and sukuk market to be made easily available all under one roof. From there, the idea to organize the data we already have in our database in the form of a publication was first conceived back in 2013. Following that, we launched the inaugural BPAM Almanac in 2014 at Securities Commission Malaysia. In line with our effort to provide general bond market information to the public, we hope that the Almanac will be beneficial to investors, issuers, interbank dealers and brokers, risk managers, researchers, analysts, and even students. We have made the Almanac available through BPAM's website and client platform BondStream for free, so anyone can just download the latest as well as the past Almanacs anytime at your convenience. Moving on. Just to walk you through all the past almanacs that we have published, we published the inaugural edition in 2014 with the full year data for 2013. Since then, we have one almanac publication each year, and it is usually published around this time of the year for the past year ending. As you can see, going through the covers, each year has its own theme. So Almanac 2020 was focused on ESG, where we included an ESG research article and the BPAM ESG league tables in line with market appetite for more data and information on the ESG environment in Malaysia. Next up, we are going to give you a preview of the latest almanac along with a general brief of the content. On behalf of BPAM, I would like to present to you the Malaysian Bond and Sukuk Almanac 2021, which will be made available through BPAM's website and BondStream. For the cover, we drew inspiration from the Malaysian Peranakan architecture to symbolize the unique characteristics of our Malaysian bond market. At the same time, it also tells the story of resilience and adaptability, just like how our Malaysian bond market has been throughout the years. As for the color scheme, we went with pastel and light hues to pay homage to all Malaysians who have been affected by the COVID-19 pandemic and most recently the flood disaster. On the other hand, the hues also signify hope and kindness as Malaysians rose up to help those in need without any hesitation, which brings us back to the overall message of the cover, which are resilience and adaptability. Okay, moving on, I will give you a general overview of the content of the publication. Firstly, it starts off with a foreword from Encik Meor Amri Meor Ayob, BPAM CEO and Executive Director. Then there will be a short write-up about BPAM's developments and activities throughout 2021, which I will brief you in more detail in the later part of my presentation. Under Bond and Sukuk Market 2021 in review, our analysts and market experts will be sharing their insights on key global market events and how they relate to the Malaysian fixed income market. Following that, the Almanac also includes key market statistics such as trades data breakdown, issuance statistics, and MJS yield curve movement, among others. Timelines of different market events are also highlighted through the movements in the RF BPAM All Bond Index. If you are looking to have a quick summary of how the Malaysian bond market for year 2021 performed, this section will provide you the information you need in a nutshell. Taking up a large portion of the Almanac will be the issuer profiles with their respective facility and bond listing information. So this section covers all issuers with active stocks as at 31st December 2021. Our team has worked hard at writing a short summary of the company, the business they are in, holding company information, as well as list the complete facility and securities issued by the respective issuers. Last but not least, the BPAM league tables for both general and ESG are also featured in the Almanac for a full year 2021 results. These league tables highlight the Malaysian bond market performance and rankings of key bond market players in that given period. The league tables are a useful resource for research, marketing, and profiling for all market participants. Let us look at some of the league table breakdowns here. Some of the categories of interest are top issuance, top trustee, top traded amount, and top date arranger. Then these categories will be further broken down into conventional Islamic, government and non-government, rated and unrated, and many more. So this is the general overview of the Malaysian Bond and Sukuk Almanac 2021. We hope through this almanac, it will give you all the essential information that you need about the Malaysian bond and Sukuk market. So the almanac is published in soft copy PDF format and is now available on our website and BondStream. After the end of this event, we will send you the link to download your own copy. You can also access past year's almanac through our website and BondStream. Okay, moving on, in my next presentation, I will run through some of the activities and developments that happened in 2021 for BPAM. Since BPAM's inception in 2005, our main goal, which is to support the needs of the Malaysian bond market, has been one of the key drivers in everything we do through the years. Through market engagements, the feedbacks and ideas received have been successfully converted into new products and enhancements in order to serve our clients and partners better. We also believe in giving back through education and knowledge sharing in the form of workshops, participating in university webinars, as well as publications and research articles. Now, let's look at what BPAM was up to last year. In January, we organized a media workshop for journalists where Encik Meor, our CEO and ED, presented on his topic, Introduction to the Bond Market. The workshop was attended by close to 50 journalists from various local medias. The workshop aims to empower business journalists with deeper understanding of the local fixed income market in order for them to read market data better for their journalistic writing. Then in February, we published the Malaysian Bond and Sukuk Almanac 2020, along with the usual promotional drives to clients, partners, and general public. As of 31st December 2021, we had a total downloads of close to 500 downloads. So last year, in line with national aspiration for a deeper ESG market, the Almanac 2020 was focused on ESG with special features in the form of ESG research article and the ESG league tables. In March, the annual BPAM Bond Market Awards were given out based on the BPAM league tables and BPAM ESG league tables for the full year 2020. The four main categories are top bond issuer, top traded bond, top trustee, and top lead arranger, then further broken down into overall conventional Islamic. We had 12 unique winners last year, with some winning in different categories. In April, we expanded our eBPAM product offerings by launching two new data files, the issuer scoring and liquidity scoring data files. eBPAM is our one-stop e-commerce website where anyone, both individuals and companies, can purchase BPAM's data or access to BondStream on a one-off basis. Coming back to the new data files, the issuer scoring data file provides information on individual issuer curves. This data enables you to rank the issuers based on their scorings and also helps identify issuer explicit risks through the granular segmentations. On the other hand, the liquidity scoring data file provides information on the liquidity status of individual rated bonds. It enables you to assess the liquidity status of each rated bond in the bond market. These files are generated monthly with data taken as at the end of the month. BPAM hosted its annual client briefing webinar in June. This is an annual event for BPAM's clients where BPAM will present on market news and trends, as well as give preview on BPAM's new products and developments. So last year, we had one of our highest participations, which saw 269 clients from all sides of the bond market, including banks, insurance companies, fund managers, government-linked entities, and others attending. In August, BPAM expanded our stable of international partners to include Bloomberg. In this deal, pricing clients of BPAM can now access BPAM's pricing data straight from their Bloomberg terminal. This is without the hassle of going into another platform or file to check on the data they need. So this is especially true for front office and treasury dealers who are on their Bloomberg terminal at all times. So this partnership also aligns with BPAM's objective of making our data more accessible to our clients to support our clients' daily ordinary course of business. Then in September, we released our latest BondStream version 11. BondStream is our client software to deliver various fixed income data and our services. Some of the enhancements this round includes new screens, new analytics, a new service, the BPAM All Universe Bond Index, which I'll brief in more detail after this, as well as the streamlining of our menu tab for user-friendlier navigation. One particular enhancement that I would like to highlight is the user data input screen, which allows for a two-way communication between the user and BPAM's database to generate different calculations. As the primary delivery channel for BPAM's products and services, we know that it is essential for BondStream to stay relevant through the yearly updates and enhancements. Next, along with the BondStream release, we also launched a new index family, BPAM All Universe Bond Index Service. So the BPAM All Universe Bond Index Service is the first index to capture both the rated and unrated ringgit bond market in Malaysia as a whole. Thus, it provides a true representation of the overall performance of the Malaysian bond market. The index covers Malaysian ringgit-denominated long-term rated and unrated bonds in Sukuk, with issuer pool consisting of Government of Malaysia, near governments, as well as the corporate sectors. As of 31st December 2021, the index monitors a total of 1,598 long-term bonds with market capitalization of over 1.5 trillion ringgit. For anyone interested to look at the index more in depth, you may speak to your respective relationship manager to get your free trial today. Moving on, one of the last external activities we did last year was the Pricing Consultative Group PCG meeting held in November. This is a closed group discussion made up of selected clients from various segments of the bond market to share on topics ranging from pricing, new regulatory requirements, current market trends, as well as BPAM's future developments. So every 2 years, we would invite a new batch of members to participate, so each of our clients will have a chance to participate in this discussion. So as you can see, all of BPAM's activities and developments have one main goal in mind, which is to continuously meet the needs and requirements of the Malaysian fixed income market. Therefore, we believe market engagement is key in order for us to improve on our services to serve our clients, partners, and all stakeholders better. If you have any views, opinions, or suggestions you'd like to share with us, you may speak to your respective relationship managers or email us at inquiries.com.my anytime. With that, I have come to the end of my presentation. I hope you find it interesting and informative. If you have any questions regarding my presentation, you can already send it to us through the Q&A box. I'll reply to your queries either live later in the Q&A session or through a private message. Thank you, stay safe, and do have a great day ahead. I will now pass the mic back to Bakri for him to introduce you to the next presenter.
Thank you, Ms. Audrey, for the illuminating presentation. I would now like to invite Mr. Kevin Tay to present his presentation titled Underperforming Fixed Income Market, What Happened?, where he will be discussing on a myriad of reasons that caused the underper performance of the ringgit bond and sukuk market in 2021 in conjunction with economics and monetary policy outlook. Will be discussed. Please, Mr. Kevin.
Thank you, Bakri. Good morning, ladies and gentlemen. Welcome to the BPAM's annual Almanac launch. I'm Kevin Tay, the market and economic expert with the pricing team. Without further ado, let's start today's presentation. First and foremost, everyone would agree with me that investors were generally cautiously optimistic at the beginning of 2021 after spending majority of their time amidst various forms of social and movement restrictions the year before. The economy was also expected to chart a sustained recovery as resumption of production was expected to stabilize global supply chain in addition to the pent-up demand in private consumption. All these were riding on the back of mass rollout of COVID vaccination program globally. That being said, in retrospect, the financial market investors have had a mixed fortune. Depending on which type of investors they are, equity investors, at least from the US perspective, did enjoy a tremendous growth in their portfolio return. The S&P 500 equity index has reached all-time highs on several occasions and successfully registered a double-digit growth of approximately 27%. Its third consecutive year in achieving double-digit growth. Whereas for our Bursa Malaysia KLSE stock index, it registered a negative return of 3.67% over the year. As for the ringgit bond market, it hasn't fared any better. The benchmark RF BPAM All Bond Index shed 0.85% to end the year of 2021 at 187.286 point from 188.887 point a year ago. So relatively speaking, it did outperform the local stock market, which had a negative return of 3.67%. Anyway, by domestic bond market standard, this was indeed a rare occasion in which we saw a negative yearly return. In fact, this was unprecedented for the RF BPAM All Bond Index since its inception in 2007. We will look at all the major events later on. So by now, we should roughly know where the EPF got its above average return from, if they still give us a decent return this year. I believe the dividend announcement is still soon. In terms of bond yield, both 10-year MGS and UST yield rose almost in similar fashion in 2021 due to higher inflation expectation. Quantum-wise, the UST yield has not increased as much as MGS yield attributed to the Federal Reserve asset purchase or the QE program. Moving on, let's digest what happened in 2021. In the first quarter, bond market kicked off with bearish sentiment as resurgence of COVID cases reached new all-time highs. The Malaysian government imposed another round of nationwide lockdown called MCO 2.0 for all states except for Sarawak, but with more economic sectors allowed to operate. Subsequent to the MCO 2.0, the King Sultan Abdullah Sultan Ahmad Shah declared a COVID emergency to suspend parliament session upon advice from then the Prime Minister Muhyiddin Yassin. On the economic front, Bank Negara reported that the country gross domestic product, or GDP, recorded a contraction of 3.4% in the fourth quarter of 2020, a deeper plunge in contrast to the previous quarter. As a result, Malaysia's full-year GDP performance charted the worst decline since 1998, recording a shrinkage of 5.6%. The bond market witnessed intense sell-off following the release of the fourth quarter GDP, especially in the longer end of the yield curve. This was in tandem with the movement observed in the US T-yield curve. The surge in bond yield was underpinned by brighter prospects of the economic recovery, following news of successful vaccine rollouts in advanced economies, as well as increased supply of sovereign issues that saw US President Joe Biden approve a massive $1.9 trillion stimulus bill. The Suez Canal blockage that happened around the same time aggravated the whole situation as investors fear of heightened inflationary pressure due to the obstruction in the major global trading route. In the second quarter, the sell-off appeared to be abated, and the improvement observed in the ringgit bond market could be attributed to the FTSE Russell's decision to remove Malaysia from the watch list, as well as retain Malaysia in their World Government Bond Index. Malaysia's GDP recovered and shrunk by 0.5% year-on-year in the first quarter of 2021, underpinned by strong external demand, as compared to the contraction of 3.4% in the previous quarter. The Federal Reserve also maintained its dovish posture at this juncture by insisting that inflationary pressure is transitory. This has indeed helped the recovery in the bond market. However, Malaysia was soon placed under total lockdown, also known as MCO 3.0 to some, due to the spike in daily new cases. The Prime Minister subsequently introduced the four-phase National Recovery Plan, or NRP, and put the country under the Phase 1 until the exit threshold is met. Malaysian mass vaccination under the National COVID-19 Immunization Program also peaked around the same time the daily new cases surged to all-time highs. So in essence, it's a race against time to vaccinate as many people as possible in the shortest time. Since the beginning of July, Klang Valley was placed under the EMCO lockdown due to the rampant spread of the coronavirus. Towards the end of July, the Malaysian vaccination rate has surpassed 500,000 consistently on a daily basis. This was a remarkable milestone to achieve, and being one step closer to reopening of all the economic sectors. Bond market has responded positively to the news, and the 10-year MGS yield declined to 3.21% by end of July. However, despite all the measures, daily new cases constantly breached 20,000 in August, while COVID-related mortality almost reached 600 at one time in September, before the dire situation improved drastically towards the end of September as the positive effect of the mass vaccination program started to show. In August, the domestic political development hogged the limelight as Muhyiddin Yassin tendered his resignation to the king on 16th of August, following a failed attempt to salvage his premiership by extending olive branch to the opposition lawmakers. Eventually, former Deputy Prime Minister Ismail Sabri Yaakob was appointed by the king and subsequently sworn in as the 9th Prime Minister of Malaysia at the National Palace on 21st of August, bringing a swift end to the political uncertainty. On the economic front, the Malaysian GDP extended by 16.1% year-on-year in second quarter of 2021, after 4 consecutive quarters of contraction, attributed to the low base effect recorded in the second quarter of 2020. The economic growth was underpinned by strong rebound in household consumption as well as external demand. As for the FOMC meeting in September, the Fed Chairman Jerome Powell reiterated that the intention to taper its monthly asset purchase program by end of the year, but this time expecting the interest rate hike timetable to be brought forward due to persistent inflationary pressure. His view was interpreted as hawkish in nature as the 10-year UST yield popped subsequently. The 10-year UST yield reached as high as 1.68%, while the 10-year MGS yield also risen in tandem. Moving on to fourth quarter, the Malaysian Finance Minister Tengku Zafrul Tengku Aziz unveiled an expansionary budget 2022 in the Parliament on 29th of October that saw the fiscal deficit enlarged to 6.5% of the GDP in 2021, before moderating to 6% in 2022. The GDP is expected to grow between 3 and 4% in 2021, before improving to between 5.5 and 6.5% in 2022, while the inflation is also expected to moderate to 2.1% in 2022. The highlight of the budget was definitely the introduction of the one-off prosperity tax, or Cukai Makmur, to companies earning 100 million ringgit and above to fund the country's pandemic war chest. In November, the emergence of the Omicron variant in South Africa has thrown the market into disarray towards the end of the month. Market participants were spooked by the news and hastily rushed to the safe haven of the US Treasuries for cover and pushed back the interest rate hike expectation to second half of 2022. The 10-year UST yield dropped to 1.43% by month end. On 12th of November, Bank Negara announced the economy contracted by 4.5% in the third quarter of 2021 due to the strict containment measures, particularly in July, under phase 1 of the NRP, but subsequently improved as more states transition into phase 2 of the NRP with less stringent measures. Finally, in December, bond investors were caught off guard by sudden change of tone by the Fed Chairman Jerome Powell, in which he finally threw in the towel and admitted that the inflation was much severe than he had earlier anticipated, after spending months telling the market otherwise. Inflation is indeed real. I'm sure everybody can feel the rampant price increase as compared to last year since the beginning of January this year. Up next is the foreign holdings of the MGS. Throughout the year, it hovered between 180 and 190 billion ringgit. However, in percentage terms, it has slightly dipped below 40% of the total outstanding due to the increased MGS supply. The Malaysian ringgit too had a laggard year, dropped from around 4 to 4.16% against the US dollar over the year. That being said, we can clearly see the foreign interest has shifted to the Islamic space. Foreign holdings in the GII has slowly crept up to above 40 billion ringgit from just around 25 billion ringgit the year before. In percentage terms, the uptrend is apparent. As of December last year, it has surpassed 10% of the total outstanding. Next, let's look at the sovereign bond issuance in 2021. Total gross issuance for the MGS and GII grew by 7.5% to 160 billion ringgit in 2021 from 148.8 billion ringgit a year ago, attributed to the increased fiscal spending that includes additional stimulus package. The slight increase was inevitable as Malaysia has been providing free vaccination to the public since February last year. In October, the Malaysian statutory debt ceiling was raised to 65% of the GDP from the previous 60%. The increased debt limit will be in effect until 31st of December this year, after which it will return to its original limit of 60%. The next slide is on the corporate bond issuance. The primary issuance for all corporate debt expanded by 9.3% to approximately 114 billion ringgit in 2021 from 105 billion ringgit a year ago, partly contributed by the tremendous 33.2% growth in the unrated space that saw annual issuance size reaching 24.9 billion ringgit. Generally speaking, issuers still chose to remain on the sidelines amid challenging business and rising interest rate environment. Up next is the US inflation data. We already knew the Fed is watching the US inflation level like a hawk. The expansionary monetary policy, supply chain disruptions, and labor shortages have all contributed to the higher inflation rate in the US, with the December CPI registered at 7% year-on-year, the highest level since 1982. The latest data for January is even higher at 7.5%. As for the Malaysian CPI, it recorded a multi-year high of 4.7% in April, resulted in the real interest rate dropping to negative 2.95%. The CPI has since eased to 2% in August before creeping up again to 3.2% in December. As global inflation is on the rise, the Malaysian CPI should be trending higher from now on. We have just looked into various factors that affect the bond market in 2021. But market volatility has made a big comeback since January this year. So what has changed in just 1 month? It could be summarized into the following few points. First being the uncertainties in the monetary policy. Market participants are still guessing how many times the Fed will raise the interest rate this year. That basically depends on the high frequency data like the CPI, which at the moment is going through the roof. Any unexpected shocks to the supply dynamics will surely cause the CPI to shoot up. Then, of course, is the much talk about Russia and Ukraine border standoff. Any form of incursion by the Russian military will surely draw strong response that includes economic sanctions from the US and its allies. Surely the global crude oil prices will soar once again. Finally, is the discovery of new variants like the Omicron that has once again put the global effort in tackling the pandemic on the back foot. Exporting countries like China that adopt the zero COVID policy will definitely put a stranglehold on global supply chain. More and more countries are now shifting back production from countries like China since the US-Sino trade war and now the pandemic. Although the market is extremely concerned over the monetary policy uncertainties, the Fed has actually made it clear that the QE will end in early March. Interest rate hike cycle will probably commence in March FOMC, and we shall see 4 rate hikes of 25 basis points each in 2022 as the base case, probably in June, September, and December as well. Of course, unless situations worsens. Any deviations from the base case will definitely induce more volatility. Balance sheet reduction will start after the rate hike. No specific timetable for balance sheet reduction. The Fed has not mentioned on its frequency, quantum, and final target size to achieve from the current level of around $9 trillion US. Lastly, not to forget, the Fed could be making policy mistakes. They are always behind the curve in whatever they do recently, from allowing the subprime bubble to form up until the recent blunder in not recognizing the threat posed by the supply chain disruptions. As for our central bank, Bank Negara is definitely more worried about the slack in the economy due to the pandemic than the inflationary pressure at this moment, despite knowing that the CPI is inching higher. In fact, just recently, the Bank Negara Governor, Noor Samsia, reiterated that the central bank will remain accommodative in its approach. Besides the aforementioned, Bank Negara also has to deal with increased sovereign debt supply, in addition to foreign flows in view of the Fed's policy adjustment. They may come into the bond market as buyer of last resort should the market become too volatile. All right, after listening to all the points, what are the main takeaways? In short, last year bond market performance was undermined by the surge in domestic COVID cases, coupled with heightened inflation expectation caused by supply chain disruptions. Since the beginning of this year though, market has become extremely choppy due to the concern over a runaway inflation that may spur central banks around the world to take more drastic measures to contain it. That's all for my presentation today. I hope you all find this presentation helpful. Thank you. Have a nice day and stay safe. Back to you, Bakri.
Thank you, Mr. Kevin, for that insightful presentation. This is the end of our presentations today by both of our speakers, Ms. Audrey and Mr. Kevin. I hope all of you find it informative. As a reminder, if any of you have any questions for Ms. Audrey and Mr. Kevin, please send in your questions via the Q&A box. It is now time for the Q&A session. I would like to thank everyone who has sent in their comments and queries. For this session, we will be joined by Ms. Tay Chai Fung, Senior Manager from BPAM's Pricing Department. As mentioned at the start of the event, our speakers will reply to the published questions live. If your questions are not published, do not fret. We will reply to you individually through the private message function or reach out to you via email. Okay, let's look at the questions today. For the first question, it is for Ms. Audrey Chai. What are the new updates in BondStream?
Okay, thank you, Bakri. So there were quite a few enhancements done in the latest version 11. So there were new screens, analytics, and services available if you upgrade to BondStream 11. But for anyone who would like to know in more detail, you can leave us your name, email, and entity through the Q&A function, or drop us an email at inquiries.com.my, and we will contact you for a BondStream training session. Back to you, Bakri.
Thank you, Audrey. Okay, up next, we have two questions for Mr. Kevin. For the first question is, do you expect Bank Negara Malaysia to raise interest rates this year? If yes, how many times? And for the second question, why the inflation is hotter this time around while it was rather muted in the previous QE during the subprime crisis? Mr. Kevin.
Thank you, Bakri. I will answer the first question first. As Bank Negara Governor has recently stressed that they will remain patient at this moment, I believe the base case scenario is for Bank Negara to hike at least once this year. Basically, it depends on two factors. First being the upcoming domestic CPI number. At this moment, it's still 3.2%. Any significant increase from now on will spur Bank Negara to take more drastic measures. So let's say if the CPI is inching closer to 4%, so Bank Negara may have to raise the interest rate twice this year. The second consideration is the frequency and the quantum of the Fed's hike. Any significant outflows from that will also spur Bank Negara to act accordingly. As for the second question, why the inflation is hotter this time around compared to the QE in 2008, I think this is a very good question. During 2008 subprime crisis, most of the QE money was not actually channeled to the ordinary folks. It was mostly resided at banks as they were reluctant to lend out the money. Whereas during the pandemic, the government stimulus check was actually paid directly to the people, to the pocket of the people. So as a result, those that near the retirement age chose to retire for good. And this has caused the labor shortages. Instead, employers have no other choice but to increase the salary and wages to keep the workers. So that's why the inflation is much hotter this time around than during 2008 subprime crisis. Back to you, Bakri.
Thank you, Kevin. Okay, next we have a question from Ling. This is for Ms. Audrey. Will the recording of the event be available later and where? Ms. Audrey.
Okay. Good morning, Ling. So yes, we will upload the event recording on YouTube and then send you the link for you to view. So we will also publish it on our social media, Facebook, Twitter, and LinkedIn. So do follow our pages to get the latest updates from BPAM. Back to you, Bakri.
Thank you, Ms. Audrey. Okay, we have two more questions. The first question is for Mr. Kevin. When do you see the supply chain to recover to pre-pandemic level?
Okay, thank you, Bakri. I think until such time that all the countries are fully open up instead of adopting zero COVID policy for the production to resume to its normal service. And eventually the supply chain will recover to pre-pandemic level, especially for those exporting countries like China that serve as a global factories. I hope that answered the questions. Back to you, Bakri.
Thank you, Kevin. Next question is for Ms. Audrey. Can the data in the almanac, like the league table, be extracted?
Okay, thank you, Bakri. So yes, we do have screens on BondStream where the league tables data can be extracted into Excel format. Again, if you can leave us your name, email, and entity, our relationship manager can contact you later to guide you on how to extract the data. Back to you, Bakri.
Thank you, Ms. Audrey. Okay, we have one more question here. I believe this is for Mr. Kevin. Is there any specific reason why there are high issuance of corporate bond in March in 2021?
The higher issuance in March, I think, is due to the higher issuance of unrated bonds. So there's no specific reasons for it, just the normal business for the capital market. Bakri?
Okay, thank you, Kevin. If the attendees have any more questions, you may send it to us via the Q&A box. Okay, we have one more question. Any initiatives supports additional data for SRI, ESG, green bonds, non-ESG Sukuk from BPAM platform? I open this question to both Sir Kevin and Ms. Audrey, if any of you would like to answer.
Okay, so I'll just answer from the BondStream perspective. So we do have information on SRI, ESG, and green bonds on our BondStream, where we have flagged it as under ESG. So there were a couple of screens where you can access and you can have all that information. So perhaps if you can contact us again, and our relationship manager could show you around on the available data and the screens that's in connection to the SRI, ESG, and green bonds data that you are looking for.
Okay. There will be also additional data like whether a particular ESG bond is issued under any particular standards or not, like ASEAN standards or ICMA standards. So that will be in future BondStream publications. So at this moment, we only publish whether this one is ESG compliant or not. So without any further information. So in the future, you can know whether this one is published, is issued under ASEAN Green or ASEAN Social or ICMA Green or ICMA Social or even SRI standard or SRI framework. Bakri?
Okay, thank you, Ms. Audrey and Mr. Kevin. Next, we have a few questions. I believe they are for Ms. Audrey. First is from Andy. Does the almanac include information on unrated securities?
Yes, we do cover both the rated and unrated issuers and bond listings in the almanac for 2021. Bakri?
Ms. Audrey. Our next question is, well, I'll read out the next two questions. First is from May. Can the almanac be shared with my colleagues? And the last question is, are the past versions of the almanac still available?
Okay, to answer the first question, yes, you can share it with your colleagues. So it's basically a link, so you can forward that link to your colleagues for them to download the almanac. And for the second question, yes, again, so the past versions are also available on both BPAM's website and Bondstream. So I believe on the website we published from 2018 onwards. However, if you have a Bondstream access, you can go all the way back to Almanac 2013. So alternatively, you may also drop us an email at inquiries@bpam.com.my on this, and we can send you the past almanacs to your email. Bakri?
Thank you, Ms. Audrey. Does anyone else have any questions? Okay, if there are no more questions, I will end the Q&A session right here. Thank you, Ms. Audrey and Mr. Kevin.
Thank you, Bakri.
Thank you, Bakri.
With that, we have come to the end of BPAM's Malaysian Bond and Sukuk Almanac 2021 launch. We would like to thank all of you for joining us today. Just for your information, the Malaysian Bond and Sukuk Almanac 2021 is now available for download from BPAM's website at www.bpam.com.my and via BPAM's Bondstream terminal. After this event, we'll be sending everyone who participated an email with the Almanac download link as well as the recording link for today's event. I've also put the Almanac download link in the Q&A box for all of you to download the latest Almanac as well as past versions. Once again, thank you for joining us today for the launch and hope to see all of you at our future events. Thank you and have a great day.